Ingredion is expected to deliver a year-over-year increase in earnings and higher revenues when it reports third quarter results. This reporting is important in assessing the company's earnings picture. However, equally or more important is how the actual results compare to estimates and how the stock reacts. The earnings report will be released this week on Halloween, October 31st. If the report exceeds expectations, the stock may move higher. However, if actual results miss estimates, the stock may move to the downside. So, let's take a look. Ingredion is a food sweetener, starch, and nutritional ingredient company that is expected to post quarterly earnings of $1.73 per share. This would represent a year-over-year positive change of about 1.8%. Revenues are also expected to be slightly up to $1.47 billion for the quarter. For the previous quarter, Ingredion was expected to post earnings of $1.60 per share when it actually produced earnings of $1.66 per share, delivering a surprise of 3.75%. However, over the last four quarters, the company has beaten consensus estimates just once. Exceeding earnings or missing earnings may not be the sole basis for a stock moving higher or lower. Many stocks end up losing ground due to other factors that disappoint investors. Similarly, unforeseen catalysts help a number of stocks gain despite missing earnings expectations. Ingredion doesn't appear to be a good bet for beating earnings expectations. However, investors should pay attention to other factors, particularly the way the stock reacts because the chart looks interesting. So let's take a peek at the charts. And we're looking at the 20-year monthly chart on Ingredion Inc. and the symbol is INGR. For disclosure purposes, I do not hold any shares of Ingredion at this time. And since 2000 up to the current date, it had a fairly decent upward trend, only moderate, but nothing too bad. Now, it did have a couple of times that it tested that trend line back here in 2009, maybe there in 2012, and of course, the current test down here with the close on Monday of $80.53 per share. Now, I like this overall price chart simply because it's heading on up higher, even with this downtrend that started there in, say, 2018, early 2018. And for the last couple of years or so, it's had a pretty steep downtrend. Now, what I like about this is the MAC. Looking at the MAC here, we can see that bottom in 2009 was there, and of course the current bottom here in 2019, yet the overall price chart is heading up. So what's it going to do when it finally does recover with the fast line moving through the slow line? I think it's going to be a good stock. But this is also a good example of when you see a difference between the fast line here and the slow line here. So that difference has to be closed. Now going back up here to the price chart, what I often say is that the stock has to move sideways more or less, and it is within this channel here. There could be some volatility with it, but it's more or less a sideways move in the stock price while it waits for the earnings and revenue to catch up. And once the earnings and revenues do catch up, then the stock can make a move. So right now, it's just stalling down in these lower levels, waiting for things to improve. But I think that that's going to be the next step. So being that this video comes out on Wednesday, the 30th, you only have to wait one more day for earnings to come out on Thursday, the 31st, to see what the stock market reaction is going to be. So very interesting. Moving down here into the histogram, things have been improving since late 2018 on their way up. Also, price rate of change shows that things want to head up. Relative strength, although at a relatively moderate 35.10, do show a basing here in that area. As well, stochastics look favorable. Can't really comment on volume. And then the Williams, also nice basing pattern here with the Williams starting to head up out of that oversold territory and wants to continue on up. So I would say, just as a test, watch to see what happens with the earnings on Thursday again, the 31st, and find out what happens to the stock. How does it react? Now, I'm not sure if earnings are coming up before or after the close, but you still have Friday. So perhaps pay attention and see what happens. And that's going to be another test of the charting system that I'm trying to teach. I just had a video with regard to 3M, and it was somewhat favorable in my humble opinion that the chart of 3M showed that it's basing. Now, even though earnings didn't come out all that well, somebody that would have gotten in based on my system wouldn't have been hurt too badly, if at all. So here's another chance for you to take a look at the charts and see what the reaction is when earnings come out on Thursday, Halloween. So for today, and happy Halloween, that's ChewDog Charts. Thank you.